Welcome to The Deep Dive, the show where we take a stack of sources and really pull out the key insights so you can get up to speed quickly. Today, we're digging into an earnings call that, well, it really set the market alight, Oracle Corporation's Q1 FY26 call. Ticker ORCL. This wasn't just your standard update, it felt like a fundamental shift, rewriting the story for this tech giant. Our mission today, unpack why it caused such a stir and give you the essentials.
Oh, absolutely. The reaction was pretty extraordinary. We're talking about Oracle repositioning itself in a really dramatic way.
Yeah.
And the market, it noticed big time. We'll get into the numbers, the big strategic moves, and what it all signals for the future.
Okay, let's jump right in with those headline numbers. So Oracle reported non-GAAP EPS of $1.47, and that was just a hair below the $1.48 consensus. GAAP EPS was $1.01, actually down 2% year over year. And revenue came in at $14.93 billion, also a slight miss against the $15 billion expectation, but importantly, still up 12% year over year. Now, just looking at those, you might think, okay, a bit soft.
Right. On the surface, maybe slightly disappointing versus the street's estimates. But, like you said, that's not where the action was. The focus shifted almost immediately. The real story, the thing that got everyone buzzing, was definitely in the cloud business. Total cloud revenue, that's ISS and SaaS combined, hit $7.2 billion. That's up a very solid 28% year over year. That's strong growth.
And within cloud, the absolute star was Oracle Cloud Infrastructure, OCI. It just exploded, $3.3 billion in revenue, up an incredible 55% year over year. But here's the number that really turned heads. Remaining performance obligations, RPO, that's the backlog, right? Contracted future revenue, it hit $455 billion.
$455 billion. It's almost hard to say. A 359% increase year over year. I mean, it's just a staggering figure. Management even hinted that deals in the pipeline could push that number north of $500 billion soon.
$500 billion in backlog. Wow.
Exactly. And the market instantly linked that RPO surge to AI demand. You saw the stock jump, 23%, maybe even 27% after hours? That's a record move for Oracle.
Yeah.
So yeah, this wasn't just a decent quarter, it was a total narrative reset.
So that RPO, nearly $500 billion, it's not just a big number for headlines, is it? It gives them incredible visibility for future revenue. Cloud RPO alone was up almost 500%. That builds a massive foundation as they bring more capacity online. It's like seeing the future booked.
It is, and management pointed out that OCI consumption revenue grew 57% in Q1. And crucially, they kept saying demand is still dramatically outstripping their supply, especially for these complex AI workloads. So it's not just selling contracts, it's trying to keep up with this tidal wave of actual usage demand.
And they're clearly putting their money where their mouth is to meet that demand. CapEx for FY26 expected to jump significantly. We're talking roughly $35 billion. Compare that to just, $1.6 billion back in 2020?
Yeah, it's a massive increase. And that aggressive CapEx, it did lead to negative free cash flow in Q1, about minus $362 million on $8.5 billion of spending in the quarter. But it's a very clear signal, isn't it? They are all in on scaling capacity as fast as possible because the demand is right there, right now. They also made a point of saying this spending is almost entirely on revenue-generating gear for data centers, not bricks and mortar. And despite that spending, operating income still grew 7% in Q1 to $6.2 billion. They're forecasting mid-teens growth for the full fiscal year, maybe even higher in FY27. So the underlying profitability trend is still positive.
Okay, so the big theme from the call seemed to be Oracle positioning itself as, quote, the go-to place for AI workloads. And they backed that up, signing 4 multi-billion-dollar deals just this quarter with huge AI players. You mentioned OpenAI, xAI, Meta, NVIDIA, AMD.
That's right. It's a who's who list. And a lot of that seems driven by OCI's architecture. They argue it's faster, more cost-effective for these really large gigawatt-scale AI training centers. That's their edge. And Larry Ellison, he really hammered the point that the next big wave isn't just training AI models, but using them, the inferencing market. He called that potentially much, much larger than training, a multi-trillion-dollar opportunity down the road.
And to grab that inferencing market, they announced this Oracle AI database. That sounds pretty significant, letting customers kind of make their own private data understandable to big AI models like ChatGPT or Gemini right inside Oracle Cloud.
Exactly. Vectorizing the data, making it usable for AI, but keeping it secure within the customer's environment. The idea is you can ask complex questions about your own business, using your own data securely. That could be huge for enterprises worried about privacy.
Definitely feels like a potential game changer.
And they're also pushing their multi-cloud strategy hard. embedding OCI directly inside AWS, Google Cloud, Azure data centers. They have 34 of those up now, planning another 37, aiming for 71 total. It just makes it easier for customers already using other clouds to also use OCI, lowers the friction.
Smart. And then there was the Cloud at Customer offering. That sounded almost too good to be true. The full Oracle Cloud, all features, security, everything, in 3 racks on-prem for $6 million. They claim that's like 1% of the cost of doing something similar with other hyperscalers.
It was a very aggressive pitch, emphasizing privacy and cost for customers who want that dedicated environment. A big differentiator if it holds up. And finally, they're even using AI internally to build their own applications faster. These AI application generators. So they're using their own tech to boost internal efficiency. Another sort of strategic plus.
Okay, let's talk guidance. They massively raised the OCI revenue target for FY26, up to 77% growth, reaching around $18 billion.
Yeah, a huge upward revision. And then they laid out this really bold multi-year path for OCI. They put numbers out there, aiming for roughly $32 billion next year, then $73 billion, $114 billion, and eventually $144 billion over the next 4 fiscal years.
Wow. I mean, those are some eye-popping numbers. Is there concern about hitting those execution risks?
There's always execution risk at that scale, absolutely.
Yeah.
But the demand signals, that huge RPO backlog, the fact they keep saying supply is the constraint, it gives them confidence. For the full fiscal year 26, they stuck to their 16% total revenue growth target in constant currency. And for Q2 specifically, they guided total revenue growth of 12% to 14% in constant currency, maybe 14% to 16% in US dollars. Total cloud revenue expected up 32% to 36% in constant currency for Q2. And non-GAAP EPS guided $1.58 to $1.62 constant currency, or $0.61 to $1.65 in dollars. That's still solid 10-12% growth. So yeah, the targets are huge, but the near-term guidance and the demand picture seem to back up their confidence, at least for now.
It really feels like this call definitively reset how people think about Oracle. Moving away from that, legacy software label, they're now firmly seen as a major player, maybe even a leader in AI infrastructure thanks to OCI.
Absolutely. That massive RPO number combined with a huge CapEx commitment, it just screams that they are going all in on AI. Investors are now watching that quarterly OCI run rate very closely against that 77% target. They'll also be watching the rollout of those 71 multi-cloud data centers and the details on that new AI database. Those are the proof points.
And competitively, that network advantage for AI training, potentially half the cost, that seems like a real moat, doesn't it?
It does. And on the inferencing side, leveraging their massive existing enterprise data footprint with the AI database. That could be uniquely powerful for secure internal AI uses.
Right, a unique position.
So yeah, the big CapEx means buybacks are paused, free cash flows tight for a bit. But the market reaction, it clearly showed investors are prioritizing that long-term growth potential, that OCI trajectory over near-term cash flow. It's a bet on the future.
A very strong bet, it seems. Okay, speaking of bets, now that we've laid out the facts, let's switch gears. It's time for our not financial advice segment. Remember, everyone, these are just ideas maybe a bit out there, but plausible purely for entertainment. Spark some thought. Do your own research.
Exactly. This is where we brainstorm a bold move, and Oracle's quarter gives us plenty to think about. What have you got?
Okay, here's my thought. A long-term, deep-in-the-money bull call spread on ORCL. Let's say January 2028 expiration. Maybe buying the $350 strike call and selling the $500 strike call against it. The bet here is that Oracle doesn't just hit that $144 billion OCI target, they blow past it. Why? Because enterprises will fully grasp the value of secure private AI inferencing with that AI database, plus the cost savings from cloud at customer. I think the market, even after this jump, might still be underestimating how much sticky revenue will convert from that, near $500 billion RPO over the long haul. It's a bet on sustained acceleration.
Interesting play. Definitely captures the long-term conviction. So just to wrap things up, Oracle's Q1 FY26 call, absolutely pivotal. It shifted the whole conversation towards them being a top-tier AI infrastructure provider. Yeah, there were minor misses on the headline, EPS and revenue, but the gigantic RPO, the rocketing OCI growth, the bold AI and multi-cloud moves, that's what captured investors' imagination.
Right. The road ahead needs huge investment. That CapEx number proves it. But the vision is clear. The demand seems undeniable, and the tech looks differentiated. It's compelling. Thanks for joining us for this deep dive into Oracle. And just a reminder, everything we've discussed is for information only. It's definitely not financial advice. Always do your own homework.
Yeah, and as Oracle moves forward, maybe the really interesting question isn't just if they'll succeed in AI, but whether their approach, specialized tech, multi-cloud, cloud-at-customer, carves out a whole new way to compete against the established giants, or if it just builds a really profitable large niche. That's the strategic drama to watch. Until next time, stay informed and keep an eye on those tickers.